Hello, welcome to Profess Education. Yes, Gemini Devensio. In this channel, we post content on accounting and the accounting software, not forgetting MS Excel. Before we go ahead, I would like you to subscribe to our YouTube channel and activate the notifications so that you are always updated with our latest videos. In this tutorial, we are going to be touching accounting for insurance companies. And for us to do that, we are going to have two phases. The first phase, which is explaining how insurance company works and taking a practical example. Then we are going to set up QuickBooks Desktop to manage an insurance company. So let's get to work. Let's have a look at basics in insurance accounting. Already, you should know that there are going to be three main things we'll be talking about in insurance accounting, which is going to be premiums, claims, as well as reserves. Premiums will just refer to the amount that premium or policy holders pay for insurance coverage, like health insurance, business insurance, home insurance. Now, claims are those amounts of monies that the insurance company will pay to the policy holder when he witness a loss, and the reserves are going to be those amount of monies that the insurance company will set aside so as to take care of probable or future losses their policyholders might have with time. So when it comes to the accounting of insurance companies, it depends on how exactly the policyholder pays his premium and how the insurance company manages his business as a whole. So just taking the case where the policyholder will pay the complete premium for a given period of time at once, it is going to be recorded in a liability account called unearned premium. And when, as time is passing, we are going to be deducting or earning the premium which the policyholder paid in advance. It is equally possible that a policyholder subscribes for an insurance product and he pays as time goes. We are going to be seeing more examples concerning this as we are going ahead. So, for us to actually look at the practicality of an insurance company and how to manage its accounting, we are going to take a practical case study. However, I'm going to deposit or I'm going to give the link to this document in in the description of the video so that you can easily have access to it. So, suppose ABC Insurance Company sells 1 year insurance policy to a customer for $1,200 in January 1st, 2023. The policy provides coverage for property damages or damage up to 50,000. All right. The accounting entries for the premium received and the estimated liability for potential claims will be as follows. So let's follow up. Let's say on 1st of January. This is in case the policyholder pays for the 12 months in January, for the 12 months of his subscription in the month of January. What will happen is that we are going to debit cash by the $1,200 reflecting a premium received, and we are going to credit unearned premium because it has not yet been earned. Unearned premium of $1,200 reflecting the liability for unearned portion of the premium. So the next thing we're going to do is, as time passes, ABC Insurance Company earns the premium as coverage is provided. It means as time passes, January will pass, February will pass, and so on. So when January passes, we will have to record or we have to convert the amount of earned revenue for the month of January, because all the $1,200 are unearned yet. We have not yet completed the month of January. He paid this amount on the 1st of January. So at the last day of January or by the end of January, given that it is a 12-month duration and he has paid $1,200, it means every month we are supposed to earn just $100. So, suppose that on June 30th, 2023, the company has earned $600 of premiums, which is logical. June makes it 6 months. 6 months times $100 gives $600. Reflecting the fact that half of the policy terms was elapsed, the accounting entry for to recognize the earned portion of the premium should be as follows. So if we want to record, for example, the earned revenue after 6 months, we are going to debit unearned premium. It was earlier credited here. We are going to debit unearned premium by $600 with the credit of earned premium to show that finally we've earned premium, and this earned premium is going to be an income account, and this will account for the income of this period. Claims expenses. Suppose the policyholder files a claim in August 15 for $20,000 in demand from a covered loss. ABC Insurance will record $20,000 liability for claim expense, a credit to claims payable, and a corresponding decrease in the reserves liability. A debit of reserve or debit to reserves. When the claim is paid, the claims payable liability will be recorded. A debit of claim payable, and the cash will be debited. So in summary, this is what is going to happen. If like the customer or the policyholder has a damage, and the insurance company estimates that they are going to spend $20,000 for the damage, this is the accounting entry that is going to be made. They're going to debit claim expenses to the credit of claims payable. Then when they have verified everything, and they have to give the money to the policyholder in case he meets with the criteria or with the conditions under which he registered, they're going to then debit the claims payable to the credit of cash, reflecting outflow of cash for claims settled. To realize profit, ABC Insurance Company needs to earn more in premiums than it pays out in claims and other expenses. For example, if the company earns $1,200 in premium and it pays out $500 in claims and other expenses, because the claims are not the only expenses, they can be other expenses like office supplies, rent, and other different expenses the insurance company might incur in the course of its exercise. Its underwriting profit will be $700, which consists of subtracting $500 from $1,200. If the company earns $100 in investment income, which can be another source of income for insurance company from premium, investment income from premium it received, its overall profit will be $800. So briefly, this is a quick overview of how you are going to practice accounting for an insurance company. Already you can see some accounts which are very much visible, and some of the accounts we'll mostly be talking about will be things like earned premium, unearned premium, claims payable, claims expenses, and so on. So this is practically how you can manage an insurance company. But now we are going to go in the QuickBooks desktop and see how to set up QuickBooks to suit an insurance company. So let's get directly to the software. Here is a sample company already created, and we are going to customize it to manage an insurance company. Already, the very first thing we are going to look at is the chart of account. In any company, in any QuickBooks file you open, based on the industry or based on the activities of that business, there is always a different chart of account you need to create for that particular activity. But in this case, we're talking about insurance company, so we need first to set up the accounting plan or the chart of accounts for insurance company, because that is what is going to guide us in the process. That is what is going to help us prepare the different types of financial statements we will need. For us to check on our chart of account, we go to list and we take a chart of account. Here is already a default chart of account which appears, and we look for ways to customize it so it can suit our insurance company. Here we have income. As income, here we have commission income. Also, you need to know that the chart of account in QuickBooks is made up of the account name and the account type. Already, you should note that when it comes to QuickBooks Desktop or QuickBooks as a whole, everything. What matters here is the account type. If you create an account and you do not attach it to the correct account type, you're going to be a big mess up. So what happens is that we are going to create income accounts in a chart of account, and there are already some expenses there. We will not see too much into this until we are about to record some expenses. So the first income account I'm going to create here is going to be commission income on premium. So here it's already commission income. I'm just going to edit this account. So for me to do that, I can right click and take edit account. I'm just going to add something, commission income on premium. On premium, I can say premium received, or let me just say premium. I'll take save and close. I'll also create the different accounts we had here. We had some accounts we had to use. One year we have unearned premium, which is going to be a liability account, and we are going to attach it to our different products or to a premium product, such that when we sell a premium policy to a policy holder, it should go and enter in this account in case he has paid in advance. So in this case, I'm going to create a liability account and name it unearned premium. So I get to the software, I'll come here to account and take new. I'm going to name it unearned premium, and it is going to be a liability account. Yeah, I don't see something like liability, so I'll come and select others, and I'm going to take it as other current liabilities. I'll take continue, and I put it here as unearned premium, and I take save and close. So this is the account here, unearned premium. The next account I'm going to create is going to be earned premium account, which is going to be an income account. Coming back to this, I think I can modify these commissions on commission income on the premium to be earned premium, or I can still decide and create another one, or let me just modify this. Earned premium. Next account I'm going to create a liability account. Let me create this account first. Claims expenses, which is going to be the amount of money we are going to give to our policyholders when they have damages. So I'm going to take new, and this is going to be an expense account. I'll take save and new so as to create another account. Okay, apparently this account is already existing, so I'm going to clear it. Where is it? Claims. I'm going to search and see where it is. Okay, there is already an expense account of that nature. All right, we already have claims expenses. So the next account I'm going to create is going to be claims payable. Claims payable. Let me check if it already exists. It's not yet there. So I'm going to create a new account called claims payable. And the claims payable is going to be, which type of account? Is going to be a liability account. So when I get here, I'm going to take other current liabilities and name it claims payable. I can give a description here on the account. If there is any opening balance as at the date where we are imputing or creating these accounts, here we have the possibility to enter an opening balance. If by the day you are creating this account or by the day you're computerizing your business, if you're creating an account and there is a balance on it, you come here and take enter opening balance, you impute the opening balance of that account. I'm going to take save and close. Next thing, very important, we need to create our bank accounts in QuickBooks. so that we can receive monies from our policyholders through these different bank accounts. So I'm equally going to take new, and I'm going to create a bank account. I'll take, for example, UBA Bank. And if this bank has an opening balance, you will want to impute the opening balance of that account here. You enter here and you impute the opening balance and you put the date of the opening balance. But in our case, I'm just going to allow it this way. I'll create another bank account. I'm going to create a Afriland First Bank. Take save and close. So these are the two banks account I've created, and we are going to use this to receive income. If you want to create a cash account to manage maybe your cash available, you will equally create it, but with type, with nature, a bank. As you can see, create one for cash accounts such as petty cash, checking, savings account. So bank can equally go for petty cash account if you want to create a petty cash account. So what's the next thing we're going to see? We are going to see how to set up classes and the different products in QuickBooks Desktop. So here we are going to be coming back to the chart of account to add anything if necessary. But at this level, we need to set up our products, or set up the way our financial statements are going to look like. And we are going to track our financial statements here in terms of classes. And we are going to put the classes in terms of the different insurance products the insurance company offers or sells, such that we can track incomes for those different products as well as expenses for those different products. And we are equally going to see how to create customers who belong to or who have subscribed for any of these products. For us to do that, or for us to track track the premiums in terms of location or in terms of classes, we are going to activate classes in QuickBooks the Desktop. For us to do that, we are going to take edit, and we take preferences, and we get to preferences, we get to accounting, and under accounting we come to company preference. We take use class tracking for transactions, so that we can segment our business in different departments. We take OK. It's going to close some windows so as to set it up. Good. So what's the next thing we're going to do? We'll come to list, and you can see classes has been activated. So when I take a class list, still loading, I get here and I have to create new classes. Just watch up. I'm going to create a class for, let me say, health insurance. I'm going to create a class for health insurance. Let me see. Health insurance. I'll take OK. I'll create another one again. Or let me just, I'll take next time, I'll take next so I can create the next one. We are equally going to create home insurance. Next, we're going to create which life insurance. Next, we are equally going to create a travel insurance. Let me add another one again. We can have a business insurance. Good. I'm going to stop here. You can see we have created some different insurance policies. Why are we doing this? It is so that when we get to report, we can have the possibility to create our balance sheet by classes, or get a profit and loss by classes. If I take, for example, a profit and loss by class, you will see here when we have all our informations, we'll be able to track how much income we've made for this particular for this particular class, or how much expense or how much we've spent actually on each of these particular class, where the classes are going to be our different insurance products: health insurance, life insurance, travel insurance, business insurance, and so on. So the next thing I'm going to create, or the next thing you need to know about QuickBooks Desktop, is to create now the policy holders. But how do you create the policy holders? We are going to come to customers, and we get to the customer center. And here in the customer center, we'll want to create different customers. But in this case, I am going to work it in such a way that different customers should be placed according to the policy they hold. How will I do that? When I come to new customer / job, I'll create new customer. And instead of giving the name of the customer directly, I will first of all give the name of the policy. After which I'm going to attach to this policy the name of the customer or the policy holder who registered for this particular policy. Like for example, here I'm going to put health insurance. So when you do this, if you have any information to input there, you can input. As at now, I'm just going to take okay to validate this. We have health insurance here. I'm going to create another one, home insurance. I'm going to create another one, travel insurance. I'm going to create another one again for business insurance. So you can equally take Ctrl+N to create new. Business insurance. Which one am I forgetting? I think I equally have to create life insurance. Good. So now watch out. These are the different insurance products that we sell in our insurance company, for example. Now, under each of these insurance products, I'm going to create a customer. Meaning, if somebody comes and register for a particular policy or product, we are going to create him under its own category. How do I do that? When I get here, I'll not take new customer, but I'll add job. So when I add job, I'm going to give now the name of the policy holder, say Sarah John. Sarah John. And here I'm going to assign this customer to a particular insurance product, say business insurance. And I take okay. So you can see here this person is registered under insurance, under business insurance. I can create another one again. I'm going to call her Mary Grade, and this person is going to be under health insurance. I'm going to create another one. Chris Brown, and he's going to be under home insurance, for example. Now, when you create a new customer or a new policy holder, you can equally impute that policy holder an opening balance. If, for example, there's an amount of money he's still owing or that he has to pay, he can directly come and impute it here. But for a case, I'm just going to allow it empty this way. I'm going to create another one again. Another job. Darren works. And I'm going to assign him to life insurance. So you can assign as many customers to each of the different insurance policies. So I'm going to take it this way. Good. Let me add another one again. Duke, we're going to add him to travel insurance. Good. Once you've set up the different insurance policies and you've set up the different customers, you might now want to see how to create an item. So if we go to list, here we have the list of items, and this is where we are going to have a lot of work. Here we will have to create the premium, which is going to be invoiced to customers, because when somebody comes and register for premium in an insurance company, you obviously need to make him a receipt or an invoice. So what is going to figure out in there? It is going to be an item, and that item is going to be, in this case, a premium subscription, for example. No, let me say premium income. Yeah. So here we will take new, and we are going to create it as a service. We'll call it premium. We'll call it premium, and we can say income received from policy holder. So what happens is that here you now have the possibility to give it a rate, the rate of the service, depending on the policy in question. But in this case, we're going to allow it empty, so that we have the possibility to impute the amount in the invoice itself. Now here we have to assign the account in which this money is going to enter. So when we receive premium, it is going to enter in a liability account, just like we mentioned earlier before. It is going to enter in a liability account called unearned premium. So it is going to be attached to the unearned premium account. So here I'm going to attach. Where is it? Sorry, the window just went off. New item window. So I'm going to attach this account to, I'm going to attach this premium income on the account on earned premium, which is a liability account, because we have not yet earned this money, and it does not yet belong to us actually. So we're going to take it to this account, and we take save, or we take okay. Okay, little correction. Good. So in case there is any discount, you can create a discount, but for now we are not going to get into that. So now what happens when a customer register for an insurance policy? Here we could activate a document on this our home screen, which will permit us to record it by cash directly. But here the way the interface is, we are going to pass through an invoice, then receive payments. But before we do that, we are going to set up our account in such a way that when we receive a payment, it should enter directly into our cash account, and it should not come and enter here for us to record deposit. Because by default in QuickBooks Desktop, when you record deposit, when you receive payment, it will first of all enter in an account called undeposited account for you to go and deposit it in the bank. So for me to change that setting so that it enters directly into the bank, we are going to get to edit. We take preferences, we go to accounting, then company preference, and where is it? I'm supposed to go to payment instead, and on select use undeposited fund as default account. So our monies will enter directly in our payments in our bank account. So it's going to close Windows. So I get back to my home screen. So here I'll come and create an invoice to record the registration for an insurance premium. Here we will have quantity, we have the item. However, we will have to start by selecting the customer in question. So here you can see we can select a customer who is under business insurance, or let me say Mary Grade, which is under health insurance. And here I'm going to associate it to the health insurance class, so that I can track this income in this particular area in my income statement. So here I have the item, which is going to be premium. If I want to create a new item, I can create it from here. Here I can select the item which is going to be premium. And here on quantity we can put something like the number of months. we can equally customize it so that it can show months. For us to customize it, I can directly go to formatting and customize data layout. Still loading. So from here, when it comes to quantity, where is quantity? So I'll go to columns, for example. Under columns, the fields that are there is something like quantity. So I can call it months. What else do I want to change? For example, the classes. The class I'm going to call it type. The class I'm going to call it type, so that it can be in the form of insurance type. And I take OK. I take OK. So here we are going to have type, item, description, here months to put the number of months for which the person has subscribed. So here the type, since it is Mary Great and she's under insurance, I'm going to select also the class for insurance, for health insurance, give the premium, then put the number of months, say 12 months, and we'll put the rate of the month, which is going to be $100. So at the end of it all, we will have here $1,200. So this is how you create now an invoice for a customer who registers for a product or an insurance policy. Yeah, I can take save and new or save and close. So when I do this, watch out what is going to happen to our balance sheet. For example, if I go to report, I take balance sheet standards. Already we have since we created an invoice, it therefore means that the customer has not yet given us any monies. So we're going to have accounts receivable worth 1,000, and we have unearned premium worth $1,200, which is actually what we wanted to do. Here we come to example to the profit and loss. Obviously, we're not going to have anything because we've not yet incurred any expense or we've not yet realized any revenue. So as the month, oh sorry, I made a mistake. I didn't select the date, the date for the previous document. I want to make it to be for January, 1st of January. I take save and close. Yes. So now in case the customer then pays for his subscription, might be for a month, what will happen is that I will then come to receive payment. I receive payment, then I select, I think it was Mary Great, for example. I select the amount he's paying, which is going to be just $100, and this payment is done, let's say on the 31st of January, $100. So out of the $1,200 he's paying, $100. So I take save and close. So let's watch out what's going to happen in our profit and loss account. For this is just this month. Let's take for this year. And refresh. You can see there is no income yet because the account we've selected for the recording of this premium is not an income account. So what will happen is that we will have to convert it. We'll have to convert the unearned revenue. If we come, for example, to the balance sheet, we are going to see okay, the money entered in undeposited fund. I thought we modified this, so it has to be recorded, but I think we came to edit preferences, payments. Here use undeposited fund as a default deposit account, automatically apply payment, automatically calculate payment. Normally it was not supposed to put the money in undeposited account again. So let me just record the deposit from this customer. So we are going to record the deposit in Afriland Bank. So when we get to our balance sheet, we can see that we have income worth $400, accounts payable days, and we have unearned premium worth $1,200. So if finally we record it this way, When we receive payments, after we must have transferred the money to a bank account, we need to come and make an accounting entry so as to make it to be an income, because as of now, all the $1,200 is still as a current liability. So we'll have to come to accounting and they take uh, here we have make general journal entry. So what is going to happen is that we are going to debit the account for unearned revenue, unearned premium, and the credit earned premium, which is the income account. We're going to debit it by $100 and the credit earned premium by $100. Here we are going to select the policy holder, which is Mary Create, and select the class, which is health insurance. Take save and close. So hence when it comes to our reports, we take profit and loss standard for the whole year, for example, or for the month of January. Let me take this fiscal year. So you're going to see we have an earned premium of $100, because this is actually what we have realized for this period, and not $1,200. If we interrogate, for example, our balance sheet, we are going to see that we have unearned premium of $1,100. We have cash of $100. We have accounts receivable of $100. Our net income is $100 because we've not incurred any expense. In case we incur expenses, we will have to come on the vendors area and record the expense. Or might be in case there is a damage, we will have to go and record it as an expense. But before that, we must have debited the expense to the credit of claims payable. So what happens when there is a damage to pay, say $20,000? In order not to, because I've not entered enough revenues, entered revenues of just $100. Let's say it means that in the month of February we will have to come here and enter for Mary Create $100 again for the month of February. For the month of February means every month is what we're going to be doing. Each time they come and pay for the subscriptions or for the premiums, we're going to enter this way, and we come and record the deposit. Then we come and make a journal entry to recognize the income. So yeah, we are going to debit unearned premium to the credit of, let me say, debit $100 to the credit of earned premium, $100. This should be coming from Mary Grace and its health insurance. So I'm going to close this. Good. So if we come and check on our profit and loss, we can get a profit and loss by class, for example, and you can see unearned premium $200 so far. Yeah, if we come, for example, to record the damages, like I said, we are going to debit claim expenses of the amount to the credit of claims payable. So we'll come and make an accounting entry. I will go to accountant, make a general accounting entry. We are going to debit claim expense, where is it? Claim expense. We're going to debit it. I'm not going to put $20,000. It's going to be too much for us. Let's just take a simple example of for example, $110 to the credit of claims payable. Claims payable. So if we come and interrogate our profit and loss for the whole year, we are going to see that we've earned income or premium for $200. Then we had claims expense of $110, giving us a net income of $90, which is very logical. Now, if we have any other expense, or let me say administrative expense, we'll have to come and enter a bill, then pay the bill. We enter the bill in case the expense was recorded on Accra or it was not paid immediately. Then the day it was paid, we came and entered a bill. But if the expense was paid immediately, we'll definitely write a check. So in case we're going to take the two cases. Here we select the expense account, say telephone expense, say for example $10. Oh, I've not imputed a vendor. Here we'll have to select or create a vendor. I'm just going to put an account for other suppliers. I'm just going to create an account for other suppliers. Okay, and take save and close. Then I come and pay the bills. I come select the bill and I record the payment the day I am to make the payment, and the year is what is available in our ending balance of Afriland. However, for the previous transaction, I can see here I'm still having $190 because here we did not record the cash payment, like we did not make the accounting entry to finalize the payment. We just recorded the claim by crediting the accounts payable. Normally we're supposed to come and debit claims payable to the credit of cash so that it reduces the cash at hand. So let me just validate this payment. Okay, I take done. Then I need to come and make an accounting entry so I can debit claims payable. I can debit claims payable to the debit, no, to the credit of cash, or to the credit of the account, of the bank account, the bank through which we are making the payment. I think it was $110, for example. So claims payable, it was from Mary Grace, it was from the health insurance. I take save and close. So that is it. In case we record an expense which was paid immediately, we'll have to come and write a check. Write a check, for example, here it is showing that in Afriland First Bank only $80 is left. Here I will have to select the vendor's name and pay in order to. I'm going to select the vendor's name, and I can put an expense here which was paid directly. So let me just put another expense, say travel expense, say $20. Let me take save and close. Just an example. So here when we come and print our profit and loss for the whole year, you can see that we had income earned of $200. We had claims expenses of $110, telephone expense of $10, travel expense of $20, giving a total expense of $440 with a net income of $60. Same if we go check, for example, on our balance sheet. Here we have our balance sheet by class. If we recorded expense, if we made our entries based on selecting the different classes, all the classes will be appearing here. Like so far I've just recorded in health insurance, that's why you will see information only in health insurance. This is how I can print out my balance sheet by class, or I can still have a consolidated balance sheet here, like take balance sheet standards, and here we have Afriland First Bank is left just with $10, with $60 I mean. Accounts receivables are worth $1,000. Here we have earned premium of unearned premium of $1,000. We've not yet earned this income, giving us a total liability of these. We have a net income of these, so total liability $1,060. Basically, that is how you can easily manage accounting for a premium company. If you have any question or any worries, you can post your question in the comment section, or if you have anything to contribute to this video, or so far as insurance accounting for insurance company is concerned, you can always add a comment you can always add your suggestion in the comment section. That is it. If you like the video, subscribe to the channel, and don't forget to activate the notification bar. See you in our next video.